Hello and welcome. I'm Anant Rangaswamy, and today Sir Martin Sorrell joins in from WPP's office in New York. Afternoon, Sir Martin. Let's begin with your recent investment in Nexus. You've increased your investment significantly. Why would you want to do that?
Well, you know, Anant, the background to Nexus. So we own a digital trading platform called Xaxis. It's more than a trading platform because it involves technology and data. It buys online audiences, targeted online audiences, using sophisticated data to identify those audiences and sophisticated technology, of which Nexus is the key part. So we owned a small equity holding in Nexus. We've had a long-term relationship. Xaxis was born out of 24/7 Real Media, which we acquired for $600 million in 2005. We then developed the online trading platform through several iterations. The first iteration was something called B3, then the MIG platform, and now Xaxis. And Xaxis is the largest online media platform in the world. It competes effectively with Google, with its double-click platform, and Facebook, who have resuscitated the Atlas platform, which was part of Microsoft. And in fact, Facebook have just relaunched it. And what we've done is we've transferred a technology piece that we have, the OAS platform, out of Xaxis and out of 24/7 into Nexus. And in return for that and $25 million in cash, we will have approximately a 15% stake in Nexus when the deal closes in a few weeks' time. Now, the reason for it is we want to strengthen the technology backbone of Xaxis. We're not a technology company. We apply technology in an effective way, in this case, to our media investment management operation, and in this case, Xaxis. And Xaxis has been immensely successful. It's now up and running, I think, in 32 countries around the world, up and running in India. It's been done on an opt-in basis. There was a lot of confusion, particularly amongst one of our competitors, Omnicom, as to what opt-in meant. I think John Wren made a comment in his last quarterly call saying that QN was an opt-in platform and that was different to Xaxis. That was complete nonsense and was actually corrected by Daryl Sim, who runs Omnicom's media operation 24 hours later. We've always run it on an opt-in basis, that clients select and choose to use Xaxis as part of our media services. It meant that we had to change all our media contracts, and we did that. So I think over 2,500 media contracts. And Xaxis is up and running very strongly. It competes not only with DoubleClick and Atlas, but also with Criteo and Rocket Fuel as well, and has been very successful. On its own, we calculate that Xaxis would be worth over $4 billion if you look at the valuation metrics for Criteo and Rocket Fuel, which are quoted companies. So that's the history. We're not a technology company. We thought that the technology that we switched, the open AppStream technology that we switched to Nexus, was the right thing to do, and we can focus on data, applying the technology, and our media buying platform. And you will have seen one or two analytical comments. One came out today from Brian Weiser at Pivotal, which has positioned Xaxis quite accurately as a competitor to Atlas and as a competitor to DoubleClick. I would say that we are agnostic. We don't have any proclivity to invest in media. We think that Google and Facebook and this aspect of their activities are media owners. They're not technology companies. And the Atlas and DoubleClick platforms push clients to, obviously, Google media properties and Facebook media properties. So it makes us extremely competitive. Our direct competitors can only respond, it seems, by having partnerships with as these technology companies, which are really media companies. And of course, I think that raises questions as to agnosticism, as to why they're recommending one platform as opposed to another.
So, Martin, can I ask you to simplify that? What does it mean for your clients as opposed to what it means to you?
Well, it means very simply that we buy in the most effective way and the cheapest way, in most efficient way, the audiences that they require online. We also are not prepared to use open exchanges. We use private exchanges because we're worried about the fraud issue. So the simple answer, Anna, to your question is we buy effectively and efficiently the audiences, the targeted audiences, the premium inventory that our clients want.
Right. Now, if I overlay that with your Polestar relationship, how does that dovetail in your scheme of things in the digital world?
Well, Polestar is a joint company that we formed last week with the cooperation of the Hangzhou government, which is where Alibaba started. And Alibaba is quite a remarkable story. You know that it's been floated on the NASDAQ exchange here in the US. It's achieved a market value of about $220 billion with $8 billion of revenue and about $3.5 billion of net profit. And that compares, I think, to Amazon with a market cap of 180 billion, if my memory serves me right, revenues of about 80 billion, and negligible profitability. So the parameters surrounding Alibaba from a market capitalization point of view are immensely impressive. What we've done is started Polestar, a joint company in China, in Hangzhou, as I say, with the blessing of the Hangzhou government. And what we're doing is providing an e-commerce platform for our clients, both the local clients, Chinese clients, and foreign clients. And this will be a very exciting development. The other shareholders in Polestar are ex-Alibaba, or amongst them are ex-Alibaba executives. And this is with the sort of approval of, this is not competitive in any way to Alibaba. It's really working with them to develop the e-commerce platforms that our clients are starting to develop and increasingly starting to develop in China. So very exciting, capitalizing on the growth of Alibaba in China and the future growth to come.
So, Martin, this for me is very intriguing. We've spoken enough about the huge valuations that you get in the dot-com world compared to the brick-and-mortar world. And now you're straddling both as such. And now you're investing big in this crazy valuation market. Can I have your reactions to that?
Well, we're not investing big in the valuation market because we're investing in a company that is starting from ground zero. So there's no valuation issue. With Nexus, we've traded one of our assets into a company which, in its last round of financing, it's a private company, was worth $1.2 billion according to the investors that invested, and we've invested another $25 million in cash. So we're not making high risk investments. I mean, this mirrors, Anant, what we did with Vice. We invested in Vice at a valuation of $350 million about 3 years ago for about what is now a 9% interest in the company. We invested $35 million. And Disney has now invested in Vice at a valuation of about 5% at $2.5 billion value. And there have been several rounds in between that. Now, that doesn't mean that we do this, or we are successful in doing this every time. But if you look at our investments in content, which is another area apart from online media planning and buying, or programmatic, or buying targeted audiences, if you look at our investments in MRC, Media Rights Capital, Bruno, Borat, TED 2, House of Cards. Now, Peter Chernin has invested with AT&T even more in Fullscreen, a company that we took a small interest in, and we're rolling our investment in Fullscreen as we did with Media Rights Capital when Guggenheim Securities bought into it. Imagina, we have 20% of Imagina from many years ago. Imagina is a Hispanic content company based in Barcelona and Madrid, making online, offline content, films, and controlling La Liga. Currently, that's the football league in Spain, so Barcelona, Real Madrid, the rights domestically and internationally. And then you will have seen last week, we invested in indigenous media, again, from the bottom, with ITV, the number one independent private television channel, listed, privately owned television channel, series of channels, production company in the UK. So we're making, I think, educated bets. We're not rushing out and buying a Criteo at an unrealistic valuation or a very high valuation. We're, I think, much more shrewdly using the assets that we already have, trading them in the case of AppNexus, investing small amounts of money, manageable amounts of money, 25 million with AppNexus, 35 million with Vice, and capitalizing on the shifts that we see on online media and on content. So I'm very comfortable with this. We're not extravagant. I mean, the interesting thing is, I mean, we were encouraged to sell down when Disney and Crossover came into Vice. We were encouraged to sell down, but we refused to do so. We've stayed in with full screen. We're big admirers of Peter Chernin. We're obviously big admirers of what AT&T are doing in the content space, both in Otter Media, as it's called, which is their joint company with Peter Chernin, and obviously what ultimately we'll do with full screen. Full screen manages 100 YouTube channels, and we're really excited about the opportunity. But we haven't used those higher valuation opportunities as an opportunity to sell down. Now, with Omniture in web analytics, with Buddy Media and Facebook, unfortunately we got taken out, we think, at too early a stage, and were denied some of the opportunities surrounding web analytics and Facebook. But all in all, it's going in the right direction, particularly in these areas of content and media.
Leaping from your response, I want to talk about two areas. One is Vice. What do you think of Vice? And the other is programmatic buying, where you've been quoted as saying that it's a short-term trend. So I'll start with Vice. Now, Vice is interesting.
And I've got to correct you on the programmatic. I didn't say programmatic was a short-term thing. What I said was that, and this was in the context so put it into context, a question about clients doing programmatic buying internally, in-house. Right. And what I said was, I thought it was a short-term phenomenon, not programmatic buying, that's a long-term phenomenon. No, programmatic buying inside clients, for two reasons. Firstly, because people, it's like having an in-house agency. People want to work on a multiplicity of clients, not one client. Secondly, the investment needs are highly technological, and that comment about programmatic in-house was made in the context of the AppNexus investment. So Jack Marshall, who wrote the article, wrote an article about the comment on programmatic 2 days before the release of our investment in AppNexus, and you should put the two together. We're investing in the technology through AppNexus and making sure we have the best technology which can compete against the Google. And remember, Google is 400 billion in market cap, Facebook is 200, and we're at a puny 28, 29 billion. So to compete, we have to effectively and aggressively, you know, we're pygmies, and what we have to do is to work with highly intelligent, highly focused technology companies like AppNexus, which, you know, if you do the rounds, you know, has a very strong reputation, is very highly regarded, and we work with them to try and develop the platforms effectively. So I didn't say programmatic was short term. I said programmatic in-house amongst clients was likely to be for two reasons. One, the people who work in these agencies like to have a variety. Two, it needs a big technology investment. And if we have a portfolio, as Recma says, of $100 billion that we invest in media, we're more likely to be able to provide the variety and the opportunity. On Vice, Shane Smith has done an incredible job. He's managed to attract News Corp, 21st Century Fox. He's managed to attract Fidelity. He's managed to attract us. He's managed to attract Crossover Ventures now. He's managed to attract Disney, all into an online content company, which is growing its revenues very substantially. And in my view, my humble view, equally importantly, is managing to improve its profitability and work with major clients like Intel and AT&T. So very exciting. You've only got to look at their HBO channel, the Vice channel, to see, or go onto YouTube, or look at the content that Vice is producing in London, in Shoreditch, in Brooklyn, in New York, on the West Coast, in Venice Beach. I mean, incredibly successful, very edgy, and highly attractive to millennials. And that's what Vice is about. It's about online content primarily for millennials. But even an old fart like me enjoys it.
Okay. And staying there with online content, you said that government should harness the power of platforms. Here I would like you to talk about the opportunity in India and the government harnessing the power.
Well, I mean, Prime Minister Modi is a platform, and he's done an incredible job here. And unfortunately, it collided with Rosh Hashanah, but on Thursday and Friday. But what was interesting was that he seems to have taken New York by storm. I was at the Global Citizens rock concert with Jay-Z and Beyonce, and there was Prime Minister Modi on stage. He took over Madison Square Garden yesterday, where what was it? Muhammad Ali staged his greatest fights, or some of his greatest fights, and I think the Beatles staged some of their concerts. He's taken New York by storm, and he's seeing business leaders here in New York, I think, in Washington D.C., and is going to see, I think, the President Obama, down to Washington later today. So Prime Minister Modi has, in and of himself, become a platform. But what we were saying was that there's big opportunities for governments in terms of their communications to use these platforms in a very effective way. And we're increasingly seeing them do that, not just in electoral campaigns, but in day-to-day government and managing the day-to-day operations and communications of governments and government departments. And that really was what the comment was about. And we just announced, actually, today a program with the Lee Kuan Yew School in Singapore of civil servants, where we're developing, as we've done at the Blavatnik School in Oxford, a program for government civil servants to learn more about some of the techniques that our clients use in commercial circumstances. They can use some of those communication techniques in government and government communications. So it really was a general comment about, I mean, really it was as obvious as the nose on your face that this is important and something that increasingly governments should be using, not just for electoral campaigns, but for day-to-day government. I mean, there's some wonderful examples. When we had our stream conference in Cannes this year, Twitter was talking about how a mayor, I think it was in Sri Lanka, I think with about 3,000 constituents, was running his mayoral day-to-day affairs using Twitter, asking his constituency. It was almost like having a continual set of referenda, God forbid, but asking his constituents how they felt about certain issues, how they felt about how he should handle certain issues. So this is really about extending democracy and using these technological developments to understand more of what's going on in the electorate's minds.
While we talk about governments using platforms, are brands using these platforms well enough, Sir Martin, in your opinion?
I think they are starting to, but this is like Moore's Law. I mean, there will be a growing understanding of their power. There will be new platforms that come to pass. You know, there are people probably in a garage, two young Indians, men or women in a garage in Bangalore or at a technology location in Bangalore, coming up with some idea which will revolutionize the platforms that we're already accustomed to. It'll be very much a question of change. But there's a Moore's Law that operates in terms of adoption of this. Remember that the generation that's graduating from an American university this year is probably one of the first generations that's lived with the web since the day they popped their head out of the womb. So I think this is very important to understand the impact that all this will have. and that increasingly, as these people who graduate from university assume positions of power and influence, which they will do, I think, rather quickly, it's a big, big opportunity to harness and apply these platforms more intensively. I think the answer to your question, Anand, is brands are, governments are. I think both could move faster, but I think there are very encouraging and promising signs that they do understand the power and are harnessing the power more effectively. But it does take time. It does mean changing the habits of a lifetime.
I'm afraid that's all the time we have on today's show, Sir Martin. Thank you for this conversation.
Pleasure.
With that, it's a wrap on today's show. Until next month, thanks for watching.